everyone, welcome to Power of 21. I am CA Surbhi Punshi, indirect tax expert at ClearTax, and today we are going to discuss on value of supply under GST, which again actually helps us in knowing on what particular value we are going to charge, because ultimately we need to deposit some tax to the government, but on what value do we have to even charge that GST rate? That actually helps in knowing what is your value of supply. So if we just go with the value of supply, today we are going to cover this topic, that what is value of supply and why do we need it, what are the conditions to use this valuation method, what is transaction value method, what are the valuation rules, and what is the value in the specified cases. So these are our today's topics. So first point comes in, what is the value of supply and why do we need it? So if we just talk about like what tax we actually deposit to the government. So while we put that amount or we calculate that tax amount, we have to multiply with the taxable value. That is nothing but that's your value of supply, because then what we multiply with the tax rate becomes your value. Now, the another important point is when we need this valuation rule, like in general, because when we just talk about the value under the GST, in general, we used to say the transaction value becomes your value of supply, right? But there are certain conditions which you need to fulfill while you're putting this transaction value as your value of supply. So here the thing is we need to look into this specially points. What is these points are like, are the supplier and the recipient related? Is the consideration paid not fully in money? Is the transaction value accurate? Is the supplier not able to determine the value? Does the supplier involves pure agent or money changer or insurance or air travel agent or distributor or salary agent of lottery? So basis this, like what is the answer of this, your valuation rules comes in. For example, if let's say you are dealing with or you are making a transaction with a related party, then you have to use the valuation rule. Or maybe there is a consideration, but still that consideration is not only in money. There are certain transactions. If you just think of a case, we usually have like we sell the laptop, but the laptop when we are selling, we offer them, okay, you can just buy a new laptop and give your old laptop. So the entire consideration is not in money. There is certain part of the consideration which is in kind. So this all needs to be taken care while we are going towards the valuation rule. So before that, first we'll understand what is supplier and what is recipient. So supplier here means who is actually supplying goods or services. It could be himself that he is supplying the goods and services. It could be that agent who is supplying on the principal behalf. And now when we talk about the recipient, so if there is a consideration, again, while we're defining the recipient, it depends whether there is a consideration or there is no consideration. So if there is a consideration, then recipient becomes the person who is liable to pay that consideration. And if the consideration is not there, in that particular case, recipient is the person to whom the goods are delivered or it's made available, or to whom or with whom the goods are in the possession. So that becomes your recipient. So this is like what is supplier and what is recipient. The reason why we are even understanding that what is the supplier and the recipient is because we need to also look into the related parties and other things while we are going towards the valuation rule. Now, other important point, because we said ki, okay, if the consideration is not only in the money, then in that case, again, our valuation rule will apply. So first we should understand what this consideration is. So if we just go with the definition of consideration, it says anything, whatever you're getting in return, it could be in the cash, it could be in kind too, right? But here we have understood in the previous classes that there are two important things which are not covered in the definition of consideration. So first important point is about subsidy. If the subsidy is given by the central or the state government, then that is not included in the definition of consideration. And the second important is about the security deposit. So if the security deposit you have not used it for the purpose of supply, then that is not included in the definition of consideration. So these are the two things which is not included in the consideration. But other than this, it could be like if you're doing something and you're providing something, then that is also a consideration. And if you're not even doing something, but you are getting something in return, that also becomes your consideration. Now, if we go towards the valuation rule, so if we just go with the valuation rule, it's just if the price is a sole consideration, so you are giving everything is in the price and you are dealing with the unrelated party. So they are not related. In that particular case, you have to go with section 15, which talks about transaction value. The transaction value becomes your value for the purpose of levying the GST. Right? We'll understand what this transaction value is, what are included in this transaction value, what is excluded in the transaction value. So we'll understand on this particular part one by one. Now, second important point is, let's say if it is related, or this consideration is not only in the money, it could be in some other form, right, in kind or something. Then what will be the value? Here, if the price is not the sole consideration, then there is a rule 27 which talks about that how you have to go with. So they talks about, okay, first you just look into the market value and then you go with the other procedures. Similarly, if we go with a related party, there is a rule number 28 which talks about if you are dealing with a related party, how you have to deal with it. Similarly, there are certain other valuation rules for, let's say, agent. There is a rule number 29. If there is a Kerala flood says, then how to deal with that. That is rule number 32A. There is a pure agent which talks about like how to deal with this particular transaction in rule number 33. There is rate of exchange. So when you have to convert one currency to another, then there is a rule 34 which talks about it. So similarly, we are going to also look into some specific cases where it talks about how to deal with that particular transaction. For example, in case of air travel agents, also there is a rule which talks about how to actually come up with the value in case you are doing such kind of transaction. So we'll go again one by one. So first we'll understand the normal case, which is like most common case, is the case where you are applying this section 50, where it says the price is the sole consideration and you are not dealing with the related parties, right? So in this case, if we just go with, which is a transaction value method, which is supplies between the unrelated person and the price is a sole consideration on the or for the supply, and here the value of supply is your transaction value. So now first question comes in transaction value. What does it mean? What are included in this and what are excluded in this? So we'll now understand about this. If we just talk about included, so first thing will be whatever I'm charging for my customer, that means that is the included part. That should be obviously included, right? So now we'll just understand this one by one. Let's say there is a seller, there is a buyer. Seller is supplying something to this buyer. We'll take an example of, let's say, mobile. This seller supplies a mobile phone to the final customer. While he is supplying this mobile phone, he will normally tell, let's say this mobile phone costs rupees 10,000 rupees. So he has just charged 10,000 rupees for this particular mobile. So that is a price charged. Then the supplier also says this mobile, it also has some insurance cover. I'm going to actually pay for the insurance too. That's my responsibility. It's under my contract, right? So the person, what he has done, but he has not charged the insurance money in the invoice. Rather, he has just asked this recipient to directly pay to that third party for some insurance charges, right? So in this particular case, ideally, this insurance was also one of the supply by the supplier. Similarly, there was, let's say this item was the imported item or something, and there were certain custom duties also involved, right? So in that particular case, if the custom duty was involved, that also he has added here. And then there were certain incidental charges like packing charges, delivery charges and all. And other than this person says, see, I'm going to supply you this particular item on the particular date, let's say date X. And you also have to make me the payment for this particular amount on that same date. And if you don't do that, I'm going to charge some interest and penalty because you're not making the payment on time, right? So this is like how the transaction has been. And also there could be subsidies and all. So the thing is like the particular transaction can have different type of scenarios. It could include something. It could like also exclude. Also the person says, okay, if you're going to give me the payment now itself, I'm going to give you some discount, right? So there is so many things over here. Now question comes in, what needs to be included while I'm charging this GST on this particular transaction and what needs to be excluded. So if we just talk about this, the first part, what is included in this particular thing was non-GST taxes. One of the example we have talked about, like let's say basic custom duty. Basic custom duty is not part of GST, right? So in this case, this will be included. Other than this, if there are certain other taxes which was not the part of GST, which is not IGST, CGST, SGST or compensation cess, then in that case, that particular tax will be included while you are computing the taxable value. So any taxes, duties, cess, fees and charges levied except under the GST Act, if charged separately by the supplier, in that particular case, that will be included while you are computing this transaction value. Then second part is non-government price subsidy. So what is this non-government price subsidy? If we talk about the government subsidy, we know that this is not even covered in the definition of the consideration because we have anyhow excluded that from the consideration itself. So here, just think of a case, you are supplying the paper bag. And if you're supplying the paper bag, there was an NGO who says ki if you're going to give this paper bag, then I'm going to give you some subsidy. And that subsidy is actually linked to directly that paper bag which I am manufacturing. So in this particular case, if there is certain subsidy, ideally, let's say the price of the bag was 10 rupees. But since that person has given me the subsidy which was directly linked to that particular bag, and the price becomes 8. So I have actually started supplying the paper bag at 8 rupees, right? Because this person has actually started giving me 2 rupees as a subsidy. So here this says whenever you are giving the subsidy which is non-government, in that case that should again be included in your transaction value. So the subsidy which is directly linked to the price granted by the person other than the government, and the subsidy is received by the supplier and not the recipient, in this case that will be included. So here we have to actually take care of three parts. One part, the subsidy is by the non-government, it is not with the government. Second important part is this is linked to the price. It should not be overall, because sometimes what happens, we get the subsidy, but I'm not able to link that particular subsidy to one particular unit which I'm going to sell. So if that's the case, then we don't have to include that in the transaction value. And the third part is this is received by the supplier and not the recipient. So if this is fulfilling, then that particular value will again be part of your transaction value. Then the third part is interest, penalty or the late fees. So if there is an interest, late fees or the penalty for delayed payment of a consideration, irrespective whether it has been recovered or charged or not, so you have to also include. So just think of an example, I have a contract, right? I'm in a contract that I'm going to deliver this good on, let's say, X date, and you are going to give me the payment on, let's say, Y date. But if the person don't give me the payment on the Y date, I'm going to actually receive, I'm a supplier, I'm going to receive some interest. So if I'm receiving some interest, because that is again linked to whatever I'm supplying, so that will be part of your transaction value. But here just think of one time of supply concept, because I would have already issued this invoice. At that time while I was issuing the invoice, I don't know that the other party is going to delay in making the payments. So how would I know that this person is going to delay in making the payment and I have to charge some tax amount? So in this case, the time of supply would be at the time when I am actually getting that interest amount. So while I get that amount, I'm going to pay the taxes on that amount to the government. So that can be again done with a debit note. Now the other thing is incidental expenses. When I'm talking about the incidental expenses, this is charged by the supplier and includes in respect of supply of goods and services at the time of or before delivery of the goods or services, and will include only if it is charged. So incidental expenses could be like, for example, the packing charges, the freight charges and all, which is actually needed for the purpose of supply. So that all will be again included while we are computing our transaction value. Then the other important part is about the recipient expenses. What does this mean? So it means if the supplier is liable to pay, but it is incurred by the recipient and is not included in the price. In that particular case, this person has to include this amount in the transaction value. The example could be, let's say I am a supplier and it's my responsibility to transfer this good from one place, from my place to the recipient, and it's in the contract. That is in the contract, it's the supplier responsibility to supply this goods from from the supplier warehouse to the recipient warehouse. And what I did, because I was not having this, and the recipient actually said, okay, I already have my transportation facility. Why don't you just use my transportation facility? I will just bring that truck to your warehouse, and then you can just directly deliver it to my place. Now in this particular case, if you just think, so who is going to pay to this particular the truck, the person, or we can say the conveyance and all. So here the recipient is the person who is actually paying the you can say the amount to the recipient, but who is responsible? Here supplier was responsible to pay this freight. The reason is because as per the contract, the supplier responsibility is to move this goods from here to the you can say the recipient place. So in this case, such kind of expenses will also be included while we are computing the transaction value. Now question comes in. So this was about the inclusion, like what all needs to be included while we are computing the transaction value. Now we'll talk about the exclusion, like what needs to be reduced while we are computing the transaction value. So the most important thing which comes into our mind is about the discount. Because discount is a point we can say, oh, we have to exclude this because I'm not going to charge this for my recipient. So that is how the thing is. First is discount given before or at the time of supply and recording the invoice, that we have to actually reduce it. And the second could be the post-supply discount or incentive if known in advance and linked with the invoice and proportionate input tax credit has been reversed by the recipient, then again we can actually reduce it. So what the second point actually means? So first point is clear, like I was raising an invoice and I said, okay, I'm going to give you 5% discount because you are going to make me the cash payment. That could be one example, like cash discounts and all. There could be some trade discounts also because I'm giving some offers and all, and I like, okay, I'm going to give 10% of the discount if you are buying for like above this amount or something. And that amount is actually included in the invoice also, because while I was computing, let's say I've said quantity 1 with X taxable value, and I'm going to give you, let's say, Y discount. So I will say X minus Y becomes my transaction value. So this part was really clear because we understood this was a part of invoice itself. But think of a case, sometimes we usually get the discount in a form of there is a value, and I'm not going to give the discount now. I'm going to give you a discount only after, like maybe let's say I said ki today I have a contract with you, and if let's say in the next 2 months you are going to buy like 1 lakh of a unit, then I am going to actually give you a discount of let's say 10% on whatever the invoice was issued earlier. So that is one kind of a discount. So here there was already a contract. So supplier knows that, and the recipient also knows that there could be a discount of 10% if I buy this much of quantity. So if that's the case, then at a later stage, I can actually issue a credit note and can get the facility of this discount, and can also, whatever the taxes the supplier has already paid, that amount can be reduced if that person actually issues the credit note. But here one point we have to always make sure, the recipient, because he would have already claimed the ITC on the entire amount. So the recipient should also reverse the ITC if this person is actually issuing the credit note. So if we just summarize what this discount means, so if the discount is given at the time of supply, before the supply, and also is shown in the invoice, then the discount need not to be included in the value of supply, which means that amount has been reduced. And if it's after the supply, then in the term of agreement that existed at the time of supply, so whenever he was supplying, he knows there was a contract for this, and it also can be linked to the invoice, then in particular case this amount needs to be again reduced. But one point, that the other party should have reversed the ITC which he has already claimed on this particular transaction. When we have to actually apply the valuation rule, because we understood about the transaction value, and we also understood like when it is the transaction is between the unrelated party and the consideration, the price is the sole consideration. In this particular case, we are going to use the normal section number 15, which was very clear, which is nothing but transaction value. Now question comes in, when to use this. So here, whether the price is the sole consideration for the supply, if it's yes, then we'll check whether supply and the recipient are related. And if they are not related, then we'll check whether supply is a notified supply under 15.5. When we are talking about the notified supplies, is just like let's say pure agent relationship, or it could be the air travel agents, it could be money changes and all. So that are covered. We'll also cover what are that notified services and the goods where we have to actually use the valuation rule. And if it is also known, then the assessable value becomes your transaction value. And the answer to this, if becomes no, or here if let's say it's a related party, or if these are the specified services or goods, in that case your valuation rule actually applies. So now we'll just go with the valuation rule, because first point which we have covered was the consideration was not only in money. So if the consideration is not only in money, which means there was some kind or something, or maybe I could have got something in exchange, that is also a supply, right? So here what will be the value? We have to again go one by one. So it should be in a sequence manner. So first is we'll look if we have the open market value. Just for example, let's say because here I was receiving something in kind. When I'm saying something in kind, let's say I'm a supplier and there was a buyer. I supplied a mobile phone in the exchange of the old mobile phone, and the value of that mobile phone today is 20,000, right? So in general, if I sell that new mobile phone, the value is 20,000. But since this person has given me the old mobile phone, I just charge 16,000 for that person, right? So here the price was not the sole consideration. Here there was something in kind too. So in this particular case, the price, because here I know what is the open market value, because I know the price of this mobile phone is 20,000 when I actually sell this in the market. So the price over here, the accessible value over here will become 20,000, which is the actual price of the phone. If let's say I don't know about this open market value, I just have one piece of that particular thing, whatever I'm selling. So in this case, what will happen? I will just see, let's say same example. I don't know like what is the open market value. So I don't know the actual price of the new phone. In that case, what I will do, if I know the price of that old phone, right? If I know the price of that old phone plus the amount I'm charging in money, which was 16,000. So I was charging for 16,000, and let's say I know the price of that old phone and whatever I'm getting in the kind. Let's say I'm getting something in kind and the value of that price was 4,000. Then the value will become 20,000. So we'll go here as a total of the consideration in money, which is 16,000, plus the amount equal to the consideration not in money, the price of that whatever I'm getting, which was the old phone. So if I know the price of that, I will do it like this. But let's say I also don't know what was the price of this old phone too. In that case, the value of supply will be of the like, kind, and the quality. We'll understand this in detail. What does this mean? What is this like, kind, and quality? So again, we'll go with this part. So for now, just think, let's say I have the same phone, but the model or something is little different, but it is more or less the feature and everything was same. It's just the model, or you may say color is different. If the color is different, but everything is same, then we can actually look into the price of that particular phone and then can charge the same thing. And if that is also not there, then we'll charge the consideration, the money plus monetary value of the non-monetary consideration computed as per our rule 30 and 31. We'll understand what is this rule 30 and 31. Rule 30 actually talks about 110% of the cost and all. And the rule 31 is our residual method, which talks about your best judgment assessment. So we'll understand what does that mean. So this is like how we have to actually compute the price if we are going with the, if there is no price is not the sole consideration. Now we'll go with the other rule, which is rule number 28, which talks about supply between the distinct or the related person other than agent. In this case, how we have to actually follow the order? First, we'll go with the open market value. So same example. Let's say now what I'm doing, I'm supplying to a related person. If I'm supplying, let's say mobile phone to a related person, what will happen? Let's say the same price, same model. I already have like 10 or 15 models for the same mobile phone. What price I'm actually selling to the non-related person? So if I'm selling to the non-related person at 20,000 and now I'm selling to a related person, let's say for 8,000. So in this case, the price will be 20,000 because that is the open market value of that phone. If that is not available, then what I will do the value of supply of the like, kind, and quality. Same, let's say I have some different color model right now at my shop and I know the value of that particular phone is, let's say 20,000, then I will consider that as my value. We'll also understand what this like, kind, and quality means in detail. Then the third part is, if we are not able to compute as per this, then we'll again use our rule number 30 and 31, which talks about value basis the cost, or our residual method. Then in case we were not able to do that, then also there is an option to the supplier to value the goods sold as such by the recipient. So it can actually charge 90% of the price charged by the recipient to its unrelated customer. So if I am supplying the same thing to an unrelated person, so I will just charge 90% of whatever I'm selling to that particular person. And one important thing over here is if the recipient is eligible for ITC, then invoice value will become the open market value or the taxable value. Why this is important? Now think of case, because whenever we am saying related party, it also includes your district person. District person means under the same pen you have a different GSTN and you are supplying from one GSTN to the another GSTN. So whenever you are supplying from one GSTN to another GSTN, and let's say obviously the other party is eligible to claim the ITC, in this case usually what will happen? I am supplying, let's say something for 10 rupees, right? But let's say the actual value was 100 rupees. But the other party is eligible to claim ITC. So anyhow, is actually claiming the ITC. So it's not the loss to the government, because here I'm going to pay the amount to the government, and there that person is going to claim the ITC. So ultimately, there is no loss to the government. So here the government says ki wherever the recipient is eligible for the ITC, then whatever I am charging in the invoice value, that will actually become my open market value, which is your taxable value. So this is one of the important point which actually helps in knowing the value, because a lot of like disputes comes in, we don't understand what is like kind and quality and all this thing. So this is one of the major relief which comes in whenever I'm dealing with a related party. Then the other rule is supply made or received through an agent. So the value shall be either the following, which is first is open market value or 90% of the price charged by the recipient to the unrelated customer for the supply of the like, kind and the quality, or the value as per the rule 30 or 31. So this is if I am dealing with the agent, it is more or less something like a whenever I am dealing with a related party. So here, whatever the open market value, if I have that, great, I can just go with that. And if I don't have that, then whatever the price I'm charging to the unrelated person, so I will just take 90% of that as the value I'm supplying to an agent. So that is how I can just compute it. And if this is not possible, then I will move towards rule 30 and 31, which talks about the cost method or the residual method. Now I will just talk about rule number 30, which is talks about value based on cost. It's really simple. It says whatever the cost price you have for this particular product, then you have to just take 110% of this, that will become your transaction value. So that is what is the value of supply of that particular goods, or maybe services too. So then the last one is actually rule number 31, which talks about the residual method, which is basis the best judgment method. So it says the value shall be determined using the reasonable mean consistent with the principle and general provision. So it's like, see, you are not able to actually define basis this. So I am just giving you an opportunity, okay, based on the reasonable thing, okay, you can just look into some quantity. If you feel, okay, this is actually the same thing if I am selling, obviously this cannot change the brand. Just think of a phone. I have a normal phone which does not have a brand. I have one high branded phone. So I cannot charge the price for the branded phone, which is the price of the normal local phone, right? So same with the clothes also. I am just manufacturing a t-shirt. There is one branded t-shirt and there is one normal t-shirt. And I don't know the price, I just supplied for a free of cost. So in this particular case, you always have to look into the kind and the same thing. If that is possible, then only you have to charge it. So this was about the residual method, and there was another thing about there was a rule 31A which talks about value of supply of lottery chance to win the betting, gambling, or horse racing in race club. This is again a one specific case where it says if the lottery is run by the state government, in that case 100 divided by 112 or the face value of the ticket, or 100 divided by 112 of the price is notified in the official gazette by organizing the state, whichever is higher. So that is how they have given the way of computing your value. Similarly, if the lotteries is authorized by the state government, then it says 100 divided by 120 of the face value of the ticket, or 100 divided by 120 of the price is notified in the official gazette by organizing the state, whichever is higher. So this is how you have to actually compute the value in case of the lottery. Then there is an actionable claim in form of chance to win the in betting or gambling or a horse racing or a race club. In that case, says the 100% of the face value of the bet or the amount paid to the totalizer or the lottery run by the state government. So lottery not allowed to be sold in any state other than the organizing state, and the lottery should be authorized by the state government. So lottery authorized to be sold in the state other than organizing the state also. So this in short, if we just talk about what is the value of the supply of the lottery chance to win in betting, gambling, or a horse racing in the race club. So it talks about whether it's run by the state government or it is run by the we can say the lottery is authorized by the state government. So basis that we have actually defined what is the value for both of these cases. So if we just talk about how to follow this rule, if we talk about supplier of goods, then you have to first use your rule 27, then 28, then 29, then 30, and then 31. And if you have a supplier of services, then you have to first use rule number 27, 28, 29, 30, and 31. But you can again skip the rule number 30. You can directly go from rule number 29 to 31. So this is about the supplier of services. So now the another important, because while we were discussing about the rule, we have also discussed on the same kind or quality. What does that mean? So it's generally a comparable value method. So here the whenever we are saying the same kind or the quality, it means the transaction value of the goods or services of the like kind and the quality supplied around the same time to the other customer, adjusted for some relevant factors. Because there could be a case, let's say if I'm supplying something in the month of June and the other thing I'm actually supplying, let's say in the month of September, and they certain item, let's say it's the winter clothes. So if I'm supplying winter clothes, some winter clothes in the month of April and some winter clothes when there is a season, let's say in the month of December. So obviously value would be little different. I cannot compare the price whether I am selling this in the month of December when it's actually needed and the same quality or the quantity thing when in the month of, let's say, April when it was not needed. So I cannot compare these two. So this is really important while we are looking into the kind or the other things. So if we're just talking about it, it can be the goods identical in physical characteristics. It should be little bit same, or the quality or the reputation and the functionality, or it is commercial interchangeable. Like for example, if I'm buying one cloth and it's a local brand. So if it's a t-shirt, maybe for one thing I can exchange for the two, the price would be same for me. But if I'm buying some branded thing, so maybe the price could be little different. I cannot actually compare the branded quality with the normal local thing. So there we have to always look into it. So now when we talk about the services of the like kind and the quality, here the services identical in nature, quality and reputation, whether or not supplied to the same person. It's little tricky because when we are talking about the services, because services actually is intangible. And every person who is providing the services could be little different, right? It cannot be same. Maybe one profession providing some services could be little different as compared to the other person providing the same services. Think of a CA who is a professional. Let's say I am actually filing the GST for one particular person, and the other CA also files the same thing, the GST return. The way maybe I am filing, the way that other person is filing could be little different. So it is sometimes not comparable, but that is how we have to actually compute it and come up with some price. So there are certain adjustments. Again, let's say if I don't know, I actually don't know what is the, at the same time I don't have like the same type of a goods or the services which I am supplying. So we need to make certain adjustments. Then adjustment could be the dates of supply or the quantity label or composition, quality, designs, or freight and the insurance charges. So all these adjustments we should make while we're actually valuing. So this was about the cases where the price is not the sole consideration or I am dealing with the related parties. Now question comes in about the specified cases which we are talking like pure agent or the air travel agent. So now we'll understand about like what would be the value of supply in those cases. So these are certain categories which we are going to discuss. One is buying and selling of foreign currency. The other is life insurance agent. The other is air travel agent in case of second-hand goods, pure agent or redeemable vouchers or coupons, or some service providers or specified service providers. So first is buying and selling of foreign currency. So if we are talking about buying and selling of foreign currency, which is also used as a money changer and all. So here first thing what we have to look into is whether the currency which we are going to exchange, whether that one of the currency out of the two currency is in India, the Indian or INR, if it's in INR or not. So if it is an Indian rupee, it's involved or it's not involved, basis that we will actually use this rule. So we just use whether that is in Indian rupees or it's not in the Indian rupees. So if it is in Indian rupees, then the value of supply would be the buy rate of the dollar minus the RBI's reference rate for dollar multiplied by the total unit of dollar. So this is if I'm just buying the dollar. So again, if let's say I'm selling the dollar, then it will be the sell rate of the dollar minus RBI reference of the dollar into total unit of dollar. So this is how I'm going to compare if the Indian rupees was involved. Now question comes in because I subtracted the RBI reference rate. So here if I have subtracted the RBI reference rate, in this particular case, the value of supply will be the 1% of the gross amount of the Indian rupees provided. So it could be when I'm selling or I'm buying. So that will always be the 1% of the gross amount of the Indian rupees provided. Just make sure in the previous example when I was discussing about it, here one currency is Indian. So when I'm saying where I actually said dollar, it means let's say 1 rupees is equal to let's say $80. If that's the case, then I will say okay, 80 minus what is the reference rate, minus that whatever I get, multiply with the units, and that is how I'm going to get the rate. Now the other is when the Indian rupee is not there. So if the Indian rupee is not there, what you have to do? First you have to just convert that Indian rupee. Let's say, sorry, Indian rupees is not there, then you have to first convert this foreign currency into the Indian rupees. So after you just do that, then whatever is higher, just take 1% of that. So that is how you are going to actually make sure that this is the value or the transaction value. But here we also have a second method. We can always go with the slab rate. But make sure if you're first, like let's say this is again applicable for the entire year. So once you have opted, you cannot withdraw it for the remaining part of the year. So slab rate works like if it's up to 1 lakh rupees, then it's a 1% of the gross amount of the currency exchange or 250, whichever is higher. If it's exceeding 1 lakh and up to 10 lakh rupees, then 1000 plus 0.50% of the gross amount of the currency charge minus 1 lakh rupees. And if it's exceeding 10 lakh rupees, then it's 5500 plus 0.1% of the gross amount of the currency charge minus 10 lakh rupees or 60,000, whichever is lower. So this is a slab rate which we have to use in the similar way as we also do in the income tax. While we are actually computing the income tax, we use a slab rate. Basis that will tell, okay, this is my total income tax liability which I have to pay to the government. In the same way, here what we have to do, we have to use the slab rate and then actually compute like what would be my transaction value if I am buying or selling the foreign currency. Now the other one is life insurance agent, which is again one of the good part. So here we have to first see if the policy with the dual benefit of risk coverage and investment. If that's the case, then the taxable value will be the gross premium charge less amount allocated for investment or saving, if such allocation is intimated to the policy holder at the time of collection of premium. And if it's a single premium annuity policy, then the taxable value will be 10% of the single premium charge from the policy holder, where the allocation for the investment or the saving is not intimated to the policy holder. And in other cases, the taxable value will be 25% of the premium charge from the policy holder in the first year and 12.5% of the premium charge for the subsequent year. Similarly, the last one, which is policy, if we just talk about the policy for the overseas, here it is again the taxable value will be the premium. If it just similarly, if we talk about the policy with only risk cover, then taxable value will be the entire premium charge from the policy holder. So this is about the life insurance agent, that what would be the value while we are dealing with it. The other part is air travel agent. If we just talk about air travel agent, obviously he's booking a lot of flights, right? Sometimes we don't understand like what should be the value for it, because that person actually charged too much and sometimes that person is not even charging. So here we have to see first whether it's a domestic supply or it's an international supply. Basis that we actually compute the taxable value. So if it's a domestic air travel, then it's 5% of the basic fare. And if it's an international air travel, then it's 10% of the basic fare. And when we're talking about the basic fare, it's the airfare on which commission is normally paid to the air travel agent by the airlines. Now the other important part is about the second-hand goods. So if we are just talking about second-hand goods, ideally the taxable value cannot be the selling price, because if I'm just selling for something and if that becomes taxable value, it's a huge liability for me. So in this particular case, if you're selling, if you're doing about or talking about the second-hand goods, It just says when the ITC is not availed. So if you're not availing the ITC, then the value will be the selling price minus the purchase price, and the selling price if is less than the purchase price, then you have to just ignore the negative value. So and if we just talk about when the ITC is availed, then the normal valuation as per the other applicable provision. Because if the ITC is actually availed, then you don't even care, because other party is actually going to claim whatever the taxes you are paying. So, and if that person is even paying to you, it will not actually make the difference in his life, because anyhow he is going to use that ITC for adjusting his other liabilities. But wherever you're not even claiming the ITC and you're going to make the payment. So let's say I am a supplier and I am dealing with the second-hand goods. I'm going to sell the second-hand goods. Now the recipient, if that person is, let's say, registered and he's eligible to claim the ITC and is going to claim the ITC, in that particular case, even if you charge some tax, he will actually go and just claim the ITC and will just use that against other liability. But if that person is not going to claim any ITC at all, then it will be a huge burden for him, because then he's going to actually make the extra payment for the GST component also to you. So there is a benefit, and it says that the value would be the selling price minus the purchase price while you are computing this taxable value. But one thing to remember, the CGST on the second-hand goods received from the unregistered suppliers exempt. Another important point is about the good reposes from the defaulting borrower. So another important point is about the good repossessed from the defaulting borrower. So here, if the defaulting borrower is a unregistered or it's registered, so basis this we actually know what is the taxable value. So if it's unregistered, then the purchase value will be the purchase price in the hand by such borrower reduced by 5% for every quarter or part thereof between the date of purchase and the date of disposal by the purchaser making such repossession. And if that person is registered, in that particular case, if that person is registered, then in that case, the reprocessing lender agency will charge GST at the supply value without any reduction from the actual or notional purchase value. The reason is because then in that case, anyhow, that person can actually claim ITC. So here it's in the same way. If you have think of the ITC reversal which we use in rule number 43, where they're saying like 5%, you can actually just reduce and keep on reducing the value for every quarter. So in the same way, this rule has been defined. Now, other important point is pure agent, which is usually used by us. We also say it's like a reimbursement thing. Like, just think I'm a person and I'm a CA. What I did, like, I have to charge my professional fees. So it's normal, I will just charge professional fees for my client. But sometime I have to make some payment. Let's say I have to do a company registration for my client. So there is certain MCA payment which is involved. So instead of I'm asking my client to make the payment, I just make the payment and do the reimbursement. I like, okay, you have to give me this amount to me. So such kind of services, actually we think this is a reimbursement. Why should we even pay the GST on this? So this we have to cover under this section. First, you have to understand, are we actually dealing as a pure agent or not? And if we are a pure agent over here, then we don't have to levy GST on such transaction. So here, if we just think of, we have to actually follow these conditions. Whether he pays for survey as a pure agent, whether he use the goods and services, the recipient is liable to pay the goods and services, recipient authorize the pure agent to make the payment, recipients know that goods and services provided by the third party and not by the pure agent, and pure agent shows the payment separately in his invoice. For the goods and services he received nothing extra, no profit, and the payment for goods and services is addition to his own commission. So if we just think of this example, let's say I was talking about the professional and who is doing a company registration and he directly make the payment for this MCA where the fee was involved. So first thing, whether I'm a pure agent or not. So here first we'll think whether the recipient uses goods or services. Obviously I'm going to do the registration for that person. So he's using this. Whether he is liable to pay? Yes, because the registration belongs to him. So that person was supposed to pay this payment. Just because I wanted to finish it now, so I just paid it on behalf of him, and later I'm going to transfer, and later I want to receive that amount from this person. Then he has authorized, because yes, he has authorized because he has asked me to do all this registration and also asked like pay all the payments right now, and later on he's going to give me that money back. Whether that person knows like I'm going to pay some money on the MCA side, yes, he knows that. then am I going to show it separately? Yes, I will show certain amount as a reimbursement. Am I charging an extra amount for it? No. So whatever I'm paying, let's say I'm paying 5,000, then yes, in that particular case, I'm not going to charge any extra. If I'm not charging any extra, there is no profit. Great. So whether I'm charging this in addition to what I'm going to get. Yes, this is an addition because I'm going to get professional services. The professional fees which I'm going to charge, that is my profit, or that is my income, or you can say supply. But the reimbursement part which I'm going to get from this recipient is not what I'm worried about, because it's just like a reimbursement. I have paid something over there which I'm going to recover back from my client. So if all these conditions have been fulfilled, then I'm said to be a pure agent. So here we'll also understand about the definition of this pure agent. So it's like enters into a contractual agreement with the recipient of supply to act as his pure agent to incur expenditure or cost in the course of supply of goods or services both. Neither intends to hold or nor holds any title to the goods or services or both so procured, so supplied as a pure agent of the recipient of supply, does not use for his own interest such goods or services so procured, and receives only the actual amount incurred to procure such goods or service in addition to the amount received for supply he provides on his own account. So if we just think of this example, here all this have been covered and then it becomes the pure agent services. So here what we have to do, while we are computing this transaction value, I will just charge the GST on the professional fees and I'm not going to include this reimbursement, or I will not charge the GST on this reimbursement amount. So this was the concept of pure agent which we usually use in our normal life. Now the other part is about the redeemable vouchers on a coupon. Here just think of a gift voucher. Usually we just talk about the gift voucher, and the gift voucher always have a value. So let's say our company has given something as a gift voucher of 5,000. So I know I can just spend 5,000. I cannot spend more than that. In that case, the transaction value will become the value which is there in this voucher, which is in this, for example, in this example was 5,000. Apart from that, there is some notified service provider. Here when I'm talking about the notified service provider, this is again important. So here it says the value of taxable service provided by the notified service provider between distinct person. When I'm saying distinct person, it means there are two different GST between the same PAN. If an ITC is available, then the value is supposed to be nil. So we say if we are providing services, so what we are saying, one thing, services is provided only for the taxable services and not for the goods. Second, the other party is eligible to claim the ITC and it is between the distinct person, then here the value of taxable services will be deemed to be nil. Now, apart from that, is a Keller-Flood cess. So there, when we talk about the value of supply, then the value of supply of such supply of goods or services or both on which Keller-Flood cess is levied. In that case, the value will be determined in terms of normal provision, which is our transaction value, and will not include this Keller cess. So if we think of custom duty, we usually include while we are computing the transaction value, but when it comes to the Keller-Flood cess, then it will not be included while we are doing this. Apart from that, there is a value of supply inclusive of IGST, CGST, SGST and UT tax. It is about, think of a MRP. Usually sometime what happens, we supply on a MRP and we don't know separately what was the tax amount involved and we do the back calculation. So this talks about that back calculation and it says the tax amount will be value inclusive of taxes multiplied by the tax rate percentage of IGST, or as the case may be CGST, SGST, UGST divided by 100 plus sum of tax rate. So let's say if I have a value inclusive 10 rupees and the tax rate is 18%, so the tax amount will be 10 multiplied by 18 divided by 118. So that will become my tax amount. So in short, if you just understand or we just summarize it, like what we have actually understand in today's session. So we have actually understand value of supply. We know this is very important because on this value we actually charge the tax amount and then deposit to the government. So while we are doing this, in general, if price is a sole consideration and it is not covered in the specified list, the specified list is like pure agent or maybe air travel agents. So all the specified list, if it's not covered over here and it's not with a related party, in this case, the value of supply will equal to the transaction value, where we have understood certain things are included, certain things are excluded. For example, if we just talk about something which is related to that, the normal price chart will anyhow will be included. We have talked about incidental charges, which is included. We have also talked about there are certain expenses which has been paid by the recipient, but the liability is on me. So that is actually included. The taxes apart from the taxes under the GST Act has been included over there. So there are certain things which has been included. There are certain things which has been included like discount. It could be the discount which I am doing at the time of supply or maybe before the time of supply. So that has been excluded. And if I'm doing after the time of supply or after raising the invoice, so in that case, if I have a contract earlier, in that case, the contract was there, then I can just issue a credit note and reverse the GST amount, but I have to make sure the other party is not claiming ITC and he has also reversed that ITC part. Then we have understood about our different rules where we are talking about the value of supply. We have said in general, first it should be the fair market value. If it's for if the price is not the sole consideration, then first it will be the fair market value. If I'm not able to do that, then I will look into the total value in money plus total value in kind. And if I'm not even going to do that part, then I will look into a similar kind or the type of a goods which I have. What was the price of that? If that is not possible, then I will go with 110% of the cost price, otherwise the residual method. Then we go to the other rule which talks about the related party things. When we're talking about the related party things, what it was talking about, again the same thing first, if we look into the fair market value. If it's there, great. If it's not there, then we'll go to the next rule which talks about the same kind and the quality. And if there, then perfect. If not, then we have to go to the 110% of the cost price. Otherwise, we have to go with the residuary provision. But here there was one good thing, like if you are supplying, if there is a supply between a distinct person, and in that case other party is eligible to claim the ITC, then whatever you are charging on the invoice becomes your fair market value. Then we also have discussed about the other rules which talks about the, you can say the cost of production, that 110% or another thing. So this is, and then we also have discussed about the specified services like pure agent, the money changer and all, what will be the value of supply for all this. So this is all about our today's session where we have covered our value of supply. And now in the tomorrow's session, we are going to cover one of the another important topic, which is reverse charge. Because we should understand like what is this reverse charge and what are the services and the goods which are covered under reverse charge. Thank you for attending this webinar. Hope you like this video. In case you have any doubts, you can always mail us. You can always comment on the videos also. We also keep posting these videos over the YouTube channel, so you can subscribe to ClearTax YouTube channel. Thank you. Thank you once again.